Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CHUBB LTD quarterly report. CHUBB Limited offers a wide range of insurance and reinsurance products worldwide through 6 segments. Some of the key businesses and services provided by the company include insurance products, package policies, property and general liability, workers' compensation, automobile, umbrella, financial lines, professional and management liability, environmental, international coverages, commercial marine and risk management specialty insurance, homeowners, collector cars, valuable articles, personal and excess liability, travel insurance, cyber, recreational marine insurance, crop insurance, multiple peril crop insurance and crop hail insurance for farm, ranch and specialty property and casualty, commercial agriculture products, property insurance products, including traditional commercial fire coverage and energy industry-related coverages, personal accident, and supplemental medical coverages, accidental death, business/holiday travel, specified disease, disability, medical and hospital indemnity, income protection, professional indemnity, cyber, surety, aviation, political risk, and specialty personal lines products reinsurance, property catastrophe reinsurance, traditional and specialty P&C reinsurance protection and savings products, whole life, universal life, unit-linked contracts, endowment plans, individual and group term life, dental, critical illness, dementia, hospital cash, personal accident, credit life, and group employee benefits. The stability of CHUBB Limited's stock price over the past year can be attributed to several factors. Despite reporting significant increases in net income and core operating income, as well as record-breaking earnings per share, the company's stock price remained relatively unchanged. This stability is likely due to the positive or meeting expectations nature of these reports, which did not trigger a sharp decline. Furthermore, strategic business developments such as the acquisition of Liberty Mutual's business in Thailand and Vietnam were presented positively, adding approximately $275 million in premiums and integrating well with CHUBB's existing operations. Routine corporate announcements, including leadership changes and sponsorships, also did not cause significant stock price fluctuations. The lack of a sharp decline in CHUBB Limited's stock price can be attributed to the company's consistent performance and strategic growth initiatives, which have likely contributed to a more stable stock price in response to specific news disclosures. The primary drivers of revenue growth or decline can be summarized into 3 main categories: net premiums earned, investment income, and policy charges. Revenue growth is primarily driven by an increase in net premiums earned, investment income from assets, and a decrease in policy charges. Conversely, revenue decline is mainly attributed to surrenders and withdrawals, benefit payments, and an increase in policy charges. Net income and profit margins. A shift in favor of growth. The financial summary reveals a positive trend in net income and profit margins for the company. In Q3 2025, net income rose to $2.801 billion from $2.324 billion in Q3 2024, while year-to-date, YTD 2025 saw an increase to $7.1 billion from $6.697 billion in YTD 2024. This growth can be attributed to a significant increase in net income attributable to CHUBB and a decrease in cancellation of treasury shares and other items. Profit margins also experienced a slight increase, with the net income margin rising to 19.2% in Q3 2025 from 16.8% in Q3 2024. Although YTD 2025 saw a minor increase to 16.7% from 16.3%, this uptick suggests a positive shift in the company's financial performance. The retained earnings decrease due to dividends declared on common shares is an important consideration, but it does not overshadow the overall growth in net income and profit margins. As such, these figures indicate a favorable trend for the company's financial health. The company is generating significant positive operating cash flow, with a notable increase from the previous year. In 2024, the company reported $3.6 billion in operating cash flow, which has increased to $8.8 billion by 2025. This substantial growth indicates a strong financial position and ability to generate cash from its core operations. The company's debt level has experienced significant changes over the past year. Short-term debt has increased by $699 million, while long-term debt has risen by $1,348 million. Total liabilities have also grown by $14,245 million. Furthermore, foreign-denominated debt has surged from $249 million to $2.3 billion, a nine-fold increase. In terms of interest expenses, the company paid $454 million in interest for 2025 compared to $415 million in 2024, representing an increase of $39 million. However, interest expense for the 9 months ended September 30, 2025 was minus $14 million, indicating a decrease from prior year periods. Overall, interest expense has decreased from $1,234 million in 2024 to $1,156 million in 2025, suggesting a reduction in interest expenses despite an increase in debt levels. The financial summary reveals a mixed performance across various regions and segments. Regions that performed well include North America, Europe, and Asia Pacific, with notable growth in net profits. In contrast, Latin America experienced a significant net loss. Within these regions, certain segments stood out for their strong performance. Property and casualty insurance, P&C, in North America and Europe, as well as life insurance, demonstrated impressive growth. Overseas general insurance also showed substantial growth in net premiums written. However, some segments struggled to keep pace with the overall growth. North America agricultural insurance saw a decline in net premiums written, while general insurance in North America and Europe experienced poor performance. Reinsurance in these regions also underperformed. Interestingly, North America's mixed performance was attributed to poor underwriting results, high loss ratios, and expenses. International operations faced challenges due to higher retention levels and lower coverage limits compared to North America. Management is outlining a strategic expansion plan for the company, focusing on increasing its presence in Asia through targeted acquisitions. Specifically, they are set to acquire LMG Insurance in Thailand and Liberty Insurance in Vietnam by early 2026, pending regulatory approvals. This move aims to strengthen the company's foothold in the region. In addition to this growth strategy, management is also emphasizing the importance of risk management. They are utilizing various financial instruments such as derivatives, options, and exchange-traded equity futures contracts to mitigate market risks and protect against unexpected shifts in interest rates. The company is also investing heavily in private equities, with a fair value of $16.7 billion as of September 30, 2025. This investment approach is guided by a long-term view, with the goal of maximizing total return while minimizing risk. Overall, management's outlook and strategy are centered around strategic growth through targeted acquisitions, effective risk management, and a focus on long-term value creation. The company has made several key financial transactions in recent periods. Notably, it has engaged in acquisitions and divestitures that have impacted its financials. Acquisitions include the purchase of TBAs and exchange-traded equity futures contracts, as well as integration expenses related to these purchases. These moves are aimed at expanding the company's portfolio and increasing revenue. On the other hand, the company has also made divestitures, including the payment of $800 million in senior notes due March 2025. This move is seen as a strategic decision to reduce debt and improve financial flexibility. The company's financial summary reveals that it has engaged in two key shareholder return strategies. Firstly, the company has a history of paying dividends to its shareholders, as evidenced by multiple references throughout the document. This indicates a commitment to distributing profits to investors. Secondly, the company has also bought back shares from the market, which is another way to return value to shareholders. By reducing the number of outstanding shares, the company can increase earnings per share and boost investor returns. Overall, these actions demonstrate the company's focus on rewarding its shareholders through both dividend payments and strategic capital management. And that concludes the financial summary for CHUBB LTD. Feel free to comment below, and I will be happy to answer them when possible.